Welcome to Greater Zurich Area's webinar. I'm sorry for the short delay. We faced some technical problems. Today with us, we'll have two outstanding figures in Swiss-US venture capital, Philipp Stauffer, co-founder at FYRFLY Venture Partners, and Michael Sidler, co-founding partners at Redalpine. We'll talk about VC funding in 2020, the impact of COVID-19 and technologies in demand in the next few years. My name is Michael Sidler. I'm your host. I'm stepping in for Lucas, our North America Executive Director. I would like to start with some housekeeping. Let me quickly tell you what you see on your screens. To the left is the GoToWebinar viewer, through which you see the presentation slides. To the right is the control panel with the questions field at the bottom. We would like this webinar to be interactive. So please type your questions into the questions field during the presentations, and we will answer them at the end of the webinar in the Q&A session. The webinar is being recorded, and we will be uploading the webinar recording to our website tomorrow, and we will also send it into your mailbox. Before I introduce the speakers, I will give you a very brief introduction to our business region and also to our organization. We, as Greater Zurich Area Limited, we help companies looking to grow internationally. We help with your expansion into Europe and Switzerland and support you with all your site selection needs, including site visits, comparative data, and evaluation. We plug you into the ecosystems of Greater Zurich and connect you to key stakeholders in your industries. Last but not least, we provide advice on setting up your company in Switzerland, legal forms, tax incentives, R&D collaboration, and related matters. And yes, our services are free of charge. We are funded by a public-private partnership. Next slide, please. It is the official investment promotion agency of our region and is organized as a public-private partnership. On the public side, we are supported by the governments of 9 Swiss states, or cantons as we call them, the city of Zurich, and the region of Winterthur. And on the private side, we work with some 30 companies as well as 4 universities, including ETH and the University of Zurich. Enough talk about us. Let's switch gears and delve into today's topic, venture capital in and from Switzerland. Not long ago, we were happy to learn that with a growth of more than 80%, investment in Swiss startups has broken through the 2 billion barrier in 2019. However, in the first quarter of 2020, global VC funding has slowed down, obviously, with distinct trends in different regions based on the timing of shelter-in-place orders and the spread of COVID-19. As our world is shaken in the most dramatic way imaginable, it is time to get closer, support, and learn from each other. Some of us remember the crash of 1987, the dot-com bubble burst of 2000, 2001, and the 2007 financial crisis. With COVID-19, though, the economic crisis is happening very sudden, and the impact is horrific. In the COVID-19 shocks trigger an economic contraction, we can look at the previous 2 recessions as historical analogies for the current moment. In those cases, the total drops in global VC investments were between 21 and 29% over 12 months. After 2 recessions, global VC investments took 1 and 3 years to recover to pre-contraction level. Wow, now let's leave this here for now and go straight to the introduction of our first guest, Philipp Stauffer. Philipp spent over 20 years in technology and related industries in the US, Europe, and parts of Asia as an entrepreneur, operator, investor, and consultant. Philipp is co-founder and general partner at FYRFLY Venture Partners. Before turning VC, Philipp was active as a tech founder and CEO in the Bay Area. He co-founded Honor, a startup in native and immersive marketing, and also Drop Impact, an innovation catalyst working with Fortune 500 companies internationally. In a previous life, Philipp was a senior executive at companies such as Accenture and Adchemy, focusing on growth strategy and innovation in areas such as cloud, big data, e-commerce, mobile, and digital marketing. Philipp holds a bachelor in microeconomics and strategy management from the University of Applied Sciences in Zürich and an MBA from the Wharton School, University of Pennsylvania. What I also would like to mention, Philipp is a founding board member of the Swiss Blockchain Federation, a board member of the Swiss American Chamber of Commerce, and a strategic advisor to the Swiss Entrepreneur Foundation. Last but not least, Philipp is one of Greater Zurich Area's honorary ambassadors. There's much more to say about you, and I generously left out many of your stations in life, but let's focus on what you do today and welcome you warmly to the show.
Thank you.
Let's start with one question for Philipp. About 4 weeks ago, you sent us quite an uplifting email. You said we did 2 up rounds in Switzerland and 3 new deals in Switzerland since January 2020, kicking COVID's ass. So let me ask you, another month has passed since that email. Did anything change since then? Can you keep the pace and still think now more than ever?
Well, thank you for the nice introduction. I really appreciate to be here, and thanks everybody for joining. It's also great to be here with Michael. I think we hear more about you in a second as well. It's not like we sat down and said, let's kick COVID's ass in Q1 and do more deals. It was really just a normal part of our deal flow, and it just happened to be that 3 of these deals were actually in Switzerland, since that we have given that we have a focus there as well. Just quickly, I mean, we invest in early stage entrepreneur who built a competitive advantage through data and intelligence. So deep tech, digital transformation are big topics for us. Around ICT. And so as you have observed, like in the early part of the crisis, pretty much everything crashed on public markets, and then very quickly the market realized who will benefit and who will not. And clearly from our investment thesis perspective, we see quite a bit of traction in parts of our portfolio. We see others who have more challenges. But our investment thesis is kind of benefiting from times where digital becomes more important, and actually larger problems of the crisis can be solved through digital means, which is kind of a wake-up call for many Fortune 500 companies who are behind in digital transformation. And so from that perspective, our pipeline was just not getting a hit, and we kept seeing entrepreneurs who also suddenly either had pivot ideas of core technologies that they've built and now seen better application and use cases in the crisis, which is fantastic. They actually then move away from let's say smaller problems or silly problems and move into real problems to solve, because in a crisis like this a lot of things become obvious. And gaps we have to kind of address. And then other entrepreneurs just were right on track of building companies that actually, in our opinion, will benefit from this. Like one announcement you might have seen is Locity, which is one of the companies we co-led the Series A with, together with Tomahawk VC in Switzerland. And while there's a lot of opinion in the market now that commercial real estate will also take a hit, and Locity is an analytics company for smart tech in commercial real estate. We believe that the velocity within commercial real estate, for example, to optimize office space will increase, and any data-driven approaches in that space will benefit. So there's different ways, of course, on what your thesis is and how you see the future. If you think you will benefit or your companies will benefit or not. But I think that's what entrepreneurship at the end of the day is. Entrepreneurs look at the moment, they look at the future, they see a gap of a problem that has to be resolved. And we are excited to work with quite a few of them who address those issues. And quite frankly, we are super proud on how quickly our portfolio companies, many of them jumped in from very quickly from whining and in shock condition to kind of jump in and look for the upside and see how they can help fight the crisis with their technologies.
Okay, thanks, Philipp, for that initial assessment. I see that in the meantime that Lucas, our original host, has joined. Lucas, welcome to the show. And
welcome, everyone. Thank you. Thank you so much, Reto. The importance of a team demonstrated here. I was locked out by our own system. Apologies for that. Thank you so much, Philipp, and thank you so much, Michael, for joining us. Let me now bring on Michael Sidler. It's a great pleasure and honor for me to introduce Michael. He has co-founded Redalpine Venture Partners in 2007 and acts as channel partner for the Redalpine funds. Before Redalpine, Michael was responsible for corporate investments and M&A at Prionics AG, a diagnostics/biotech company in Spieren, just outside of Zurich, where under his guidance, several acquisitions have been completed. From 1998 to 2003, Michael was with the Boston Consulting Group in Zurich and Toronto as a consultant and project leader in several different industries and roles. Michael holds a PhD in life sciences from University of Zurich. He is a member of several organization juries, boards for the support of innovation and startups in Switzerland, and he leads the VC chapter of SICA. Well, Michael, first question for you. 2 weeks ago, during a webinar of our colleagues at Venture Lab, you said, hey, now is the best time to invent technology that will shape your lives. Can you elaborate on that, and have you found in those 2 weeks a technology that will save our lives?
Yeah, hi everyone. Pleasure to be here and to give you some feedback and some insights about how VCs cope with the current situation. So yes, I'm quite certain about that because when you look back, for example, to the dot-com bubble burst, what was the underlying driver of the dot-com bubble burst? The underlying driver was the spread of and the adoption of internet. When you compare the adoption of internet over the time, during that time, with the movement of the NASDAQ stock exchange, you see that basically the NASDAQ stock exchange just really jumped and dropped dramatically by orders of magnitude almost, whereas the number of internet adopters just kept growing without any disturbance. So if you focus on the underlying drivers of progress and growth, which is technology, then of course the picture is completely different. And here, same in this crisis, don't bother so much with the short-term ups and downs, really focus on the underlying opportunities and basically invent new stuff, invent new solutions. It's you know, the digital transformation has received a huge nudge right now, kicked into overdrive thanks to COVID, and everyone who wants to become an entrepreneur can really embark on that journey and jump on that wagon now. It's much easier, but of course the market will figure that out only later. So therefore, go ahead and invent new stuff. And basically what I said, and of course that was a little bit differently transcribed, I said it's the best time to invest in new technologies for investors, but basically either of it applies.
Sounds good to me. So go out there and invest and invent. Well, before our guests arrived, we had a short chit chat with you, Michael, and you just mentioned that you spend your afternoon listening to pitches and basically, dealing with founders who have new ideas and who need funding. And also looking at the data out here in the US, for instance, by Doc, who send founders are back at pitching and VCs are back at reviewing those pitches. Is that true for you guys? Philipp, do you have time these days and are actively reviewing pitches? Is it back to the level before COVID-19, or do you see a different situation than 3 months ago?
Well, I think it's definitely everything slowed down, right? I think there was phase one once the truth hit. I think kind of globally, starting with clearly with China and Korea and then Italy. I think a lot of things just came to a halt, I would say probably for 2 to 3 weeks until everybody assessed their situations. We as well, right? We immediately went back to our portfolio companies. I mean, we're in touch with them on a regular basis, of course, and working with them, but we definitely went into very, let's say, focused review of what this crisis could mean for our companies and how we have to react to it. And so I would probably say for 2 to 3 weeks, we were kind of focusing more internal with existing portfolio companies. We further pushed the deals that were in late stage of our pipeline, but we kind of had to take a hold on seeing new deals for a few weeks. That was definitely the case. And I think with many of our syndicate partners and in ecosystem here in Silicon Valley, it was kind of very similar of what I heard and experienced. But then very quickly, I think after 2-3 weeks, we started to open up the pipeline again and talk to entrepreneurs and see pitches. The problem is a little bit like if you're investing early stage, right? Like we do and Michael as well. It is important that we meet people in person, because a lot of times, I mean, in every case, you invest in a business idea, yes, but you really invest in a team, and you want to get a good confidence in the team that wherever the market will go, this team will be able to tack and seize the opportunity in the longer term. And so that's very hard still to do with over Zoom or any other kind of, let's say, video session. And so while we are seeing pitches and getting to know teams, I think deal making will slow down just because a lot of the personal interaction that you usually have in early stage with entrepreneurial teams cannot happen right now. And so I would expect that. If you look at the overall data, you clearly saw a slowdown in deals in Q1, also here in the US. I just saw recent data from Fenwick where, for example, up rounds exceeded down rounds 79% to 14%, with 7% flat in Q1 2020. And that's a decline from Q4 2019 when up rounds exceeded down rounds with 84% to 5 and 11% flat. So you definitely see across the quarter, you see a slowdown also in terms of valuations. And then throughout the quarter, that's interesting. You see definitely a decline from, let's say, the first month in the quarter to the last one. And so I think it's definitely a slowdown. However, I really want to second also what Michael said is, look, like a crisis like this, if you look at the health system, for example, and health tech and deep tech that addresses health, I mean, it's an incredible global experiment right now, what we're doing really, of how to fight this crisis and how to fight this virus. And there's thousands of entrepreneurs right now and researchers who work on new ideas, completely new ideas, and accelerated, let's say, and lowered regulations on kind of how can we really fix this. And a lot of gaps that we have become very clear now, right? And so while it's slowing down, I think at the same time, there's a lot of people thinking about how to fix really big problems that we have. And these ideas eventually will be companies, and companies will be started. So I think you see on the surface a slowdown. In the underground, I think there's a lot of creative thinking happening now, how to fix big problems, and that's what we're excited about.
Thank you, Philipp. Just quickly to stick to the topic for a few more seconds. Michael, did you see a change in targeting? Did you change your criteria in evaluating startups approaching you?
Yeah, we said we're going to change, but we didn't. So we said let's do less risk. Let's do that. Let's do this. In the end, we ended up now in that I just counted in the last couple of weeks we signed through new term sheets. We're currently negotiating a new term sheet. We went through a large due diligence with the company. So in essence, I guess we did not really change anything. But I have to say also, I'm not entirely sure if the big impact for early startups is actually happening now, because early startups per definition don't make revenues. So they're not getting hit by basically the market freezing. They're getting hit if they're not able to raise money. And the problem is, you know, right now the VCs have dry powder. That's, as I said, we are signing term sheets, we are investing. Philipp is doing the same, other VCs are doing the same. Maybe we do it at a little bit slower pace, but we're doing it. The big impact is going to be seen when the VCs right now cannot raise their next funds. That's going to be in 12 to 18 months from now. We don't know exactly how that is going to end or how that is going to turn out, but it largely depends on the overall sentiment in the markets, if the investors are willing and able to invest in new venture capital funds. But that's going to be the big impact for the startups. Right now, it's, you know, I would tend to agree with Philipp. If startups are having really a lot of troubles now, things were in dire straits already before. One more thing that I need to add here, I think it's dangerous if we compare ourselves always against 2019, which was the all-time high in the whole industry and the best of all worlds for the startup ecosystem also in Switzerland. So that was definitely a very good situation, and you know, it's quite normal that when the pendulum swings in one side, it swings also back again towards the other side.
Let's stay quickly with you, Michael. You said recently that providing loans to startups is insufficient. You also said that we have to come up with better ways to support the Swiss ecosystem. After the dot-com bubble burst, it took the Swiss startup financing ecosystem about 7 years to recover, which shows clearly that we need better ways to support the Swiss startups. Looking at the situation today, do you think what has been done by the Swiss federal government, for instance, on April 22nd, by broadening the emergency aid for innovative startups, has that been sufficient, or could we go even further as a government in Switzerland in helping startups?
Very short. Let's look at it. It's a positive sign that the startups as a group have been recognized as a part of the ecosystem or the economy that needs to be supported. But then the means to support startups with loans is not really helping much. The startup per definition has a weak balance sheet. And if you make the balance sheet weaker with a loan, the startup will either have a problem with the OR 725, which is the, whatever that's called in English, you know, the legislation and the bankruptcy law. And if you replace equity with loans, it's always a bad solution. So therefore, startups, if you want to support them, they need a form of equity, either directly, which the Swiss government doesn't want to do for reasons which are noble, but then you could do it indirectly. There are a couple of mechanisms that have been proven in other countries, like in France or in Germany, or on a European level. So there are ways to do it, and either we now, if the economy gets hit badly, we may also have to rebuild the whole ecosystem again over the next couple of years.
Makes sense. Thanks for that. Quickly back to Philipp. Philipp, in a recent podcast, the Swisspreneur Show, you mentioned or you stressed the importance of companies' cultures and resilience. And now, given the Swiss values, stressing stability, stressing long-term planning quite a bit compared to what we see over here, do you think Swiss startups have a cutting edge over, for instance, startups from the US in the next few years? What do you think?
Well, I think if I recall what I said there, I think around resilience and culture, I think that's less Swiss or US specific. I think in around those two, let's say those two terms, I definitely think it's a general strength if you're able to build it up as a startup founder and team. And quite frankly, in a crisis like this, if you have built a strong culture and a sense of purpose, which is important, so employees and the team actually feels they're working on a mission and on a company or on an initiative that is actually worth spending your life on, then I think you just you definitely have a higher chance of surviving a crisis like this, because there's many actions that companies are taking right now. They're cutting salaries, they're switching cash compensation for equity, which is an opportunity for employees to actually get a higher ownership stake, for example, in the companies they work for. It's like, but it requires that you believe in what you're actually doing and you see a purpose of working so hard 24/7 on these startups and trying to get them through the crisis. If you have a culture where it's just, oh, everybody's a little bit there because it's cool to be in a startup, those startups will not survive because they don't have the kind of the fuel and the mindset and kind of the how should I say, like the resilience built in. And so I think in good times, where everything seems to be fine and you're growing, it's every founders and executives team's first priority to build a very strong culture, so that if the crisis, when the crisis hits, it can be internally made or it can be external that you don't control, like the one we're facing right now, that the team sticks together. And I think that's universal. That doesn't really there's no difference to US companies, Swiss companies, European companies, Asian companies. It doesn't really matter. I think resilience comes through a strong culture and a sense of purpose. And companies that have a strong one will not give up, right? That's one thing. But I definitely think there's qualities that Switzerland has, and I think I mentioned this in a couple of other discussions I had in the past and articles I wrote. But if you look at, like, I always say, like, I often get asked, well, should we replicate Silicon Valley in Switzerland? And I think that doesn't make any sense, as it doesn't make sense to build Switzerland and Silicon Valley. Every country and every region has their competitive advantage through history, through work, through culture, through language, you name it, right? And Switzerland has amazing qualities around trust, around a long history of democracy and experimentation with democracy and other political systems. Like if you're an a history bug, you know that. And so we have also a big advantage around the Geneva area, right? With the NGOs we have there. We have a big advantage around decentralized or trust in decentralized decision making through democracy. And so that's the reason why crypto and DLT as a technology kind of is getting really good foothold in Switzerland. And so there's definitely let's say attributes that put Switzerland into a very big advantage going forward, also because of the whole mega trends around privacy, security, and themes like this. So can combine those attributes of Switzerland with resilience and culture, I think Swiss entrepreneurs have a huge advantage to build winners in the future. And I think that's also what we're investing in Switzerland, right? So we're very heavily looking at those attributes and try to build the competitive advantage of Switzerland into the startups we invest in.
Thank you for that. Attached to that question, probably going back to Michael. So we certainly see a situation now where company evaluations might stagnate or even drop. What can you do as an investor, as a VC, to support companies to make sure that the company valuations do not drop? The company valuations stay fair and founders have basically a fair share of the pie, and together with the founders, you as well. How can you help companies these days?
That's a very difficult question. I mean, in the end, the price is getting built by demand and supply. And if there is a huge demand for money and not much supply, by definition, prices will drop. Having said that, as an investor, I mean, especially as an early investor, you invest basically in people, in a team. Maybe they have a patent, maybe they have an innovation, maybe they have a prototype, maybe they have some customers, but basically it's the quality of a team that you finance. And if you completely squeeze them when you invest, it's not going to be a good relationship, or it's not. I mean, I always say it's like a marriage. And if you squeeze the other side, the marriage is not going to last long, or it's not going to be very fruitful. And so in the end, basically you have to find a fair arrangement in good and in bad times. But the prices will probably drop, which is not so bad. In the end, you have to create, like in a marriage, something creative together and create synergies and eventually benefit from what you create as all of the parties, the founders and the investors.
That sounds very good. I love the analogy with the marriage. Before we go over to the public Q&A, let me ask all the guests quickly. So do you think the economy will recover quickly as soon as the lockdown is over? I'm sitting in New York City, so the lockdown is still in place. Quickly, a few months. Please answer yes or no. The poll is launched now. I'll give it a few seconds, up to 20. Please take your votes now. After that, we'll go over to public Q&As. We received quite a few questions. It's still balanced, I see. People are pretty much equal if they, regarding the question, if it's going to be a speedy recovery or not. Still collecting responses. We have 60% of everyone voted. All right, let me share that. All right, can you see the results?
Yep.
Yes, we can.
Perfect. Well, it's pretty much balanced, I would say. So we did not get a clear answer out of that. It's split. It depends, I guess, wherever you sit. So one question we received in the last few minutes is a question from a founder. And this person is asking, do you recommend early stage founders to pool their early investors? If yes, why? I guess this person is talking about a situation like now, a situation of crisis, and most likely this person is thinking about teaming up with other startups in order to get at least a little bit of the pie. Good strategy or bad strategy?
Very short answer, yes, pool them, because otherwise it's like herding cats.
Yeah, I mean, yeah, I would agree. I mean, if you have a chance to pool them, you'll have to herd them anyway, like cats. That's, I think, independent if you pull them or not. Might be a little bit easier because you can put them into one vehicle. But also, if you think from a cap table perspective, as you raise multiple rounds and it starts to be like a huge list of investors that you need to get approvals from and hunt down in following rounds, it just gets very complicated. So if you go to follow-on investors later and you see, and you have a very clean cap table with a few shareholders and maybe one entity that now has 20 angel investors in it, that's usually a better way to do it, and it's easier to handle going forward for you as a founder as well.
Thank you for that. We received a number of technical questions, which I will be happy to answer through email, like how is it to open a business in Zurich and whatnot. I'm happy to provide more information about that after the webinar, but probably one question that came in last night. Looking at the first quarter 2020, looking at the IPOs, we see that a large majority of the substantial IPOs over here in the US is biotech or life science IPOs. Has the time come that biotech is the new digital, or is it just a short-term kind of switch towards biotech, or do we see an increase in investments into biotech and a decrease of investments into software-related sectors?
Yeah, I think
we always had both sectors, and they went back and forth. So it's not a new phenomenon. I would not you know, somehow try to deduct a trend from that or something like that. It's just the two sectors are fluctuating, and once you have an uptrend for one sector, and then you have an uptrend for the other sector.
Sounds good, Philipp.
Definitely agree. I think we'll have to look at this over the next 4 or 5 quarters. I think if we revisit this in Q1 2021, we'll have a more balanced view on IPOs in general, and I definitely don't think it will be 90-95% biotechs at that point, because one thing I believe, and that's maybe helpful for entrepreneurs as well, is, and we see it in our portfolio too, I think out of this crisis, and that's true for VC as well as for public markets, is the market is evaluating right now like which companies will be able to address this and come out stronger out of the crisis, and which ones are not, right? And that's true. That's happening right now in front of our eyes in public markets. We will also see this in private markets, right? So if you run a startup today, you're a founder, and you can prove over the next, let's say, 2-3 quarters that you actually hold steady, are you actually improving, and you can close customers, you make customers happy, you might have a few success stories on how you helped customers to actually fight the crisis and get over it as well. That will put, I strongly believe that will put a premium on your valuation in your later rounds, because you will be able to kind of prove, look, we're bulletproof, right? We're bulletproof even in a crisis like this. Our company was able to get through it. And so I think there will be a valuation advantage to those companies, and then there's the others who kind of struggle through the crisis and lose the edge. That of course is not always only in your control as a founder. Like if you're in hospitality, for example, it's extremely brutal. If you're more around, let's say, supply chain enterprise software, and you help companies be smarter and more informed and data-driven around supply chain, you actually have an advantage. But if you prove as an entrepreneur and as a CEO of a private or public company that you can come out of this stronger, I think you'll kind of get the bulletproof stamp, and with that you'll get a premium coming out of this with VC valuations or with public market valuations.
Sounds great. Thank you so much. Philip, last but not least, very, very brief answer. We have a number of founders and startups joining today. They might want to contact you. I know there's different ways to contact you, and there might be responses from you or not. What's the best way to get in touch with you? And what are the highest chances of success, meaning to get an answer out of you?
Well, I think Michael and I see this very similarly. Get in touch with us. The best is always through a referral, right? But you can also just send us an email. I'm personally, I'm trying to answer every email I get. Sometimes it's hard, we at FYRFLY, we see our mission not only to help our entrepreneurs, but also help bridge building between Switzerland and Silicon Valley and Switzerland. I'm doing this personally for the last 20 years. So I'm happy to help any entrepreneur, even if it's not in our investment thesis, even if we're not the experts, and we're happy to refer them to somebody else who might have deeper expertise around certain areas. But please just get in touch. And the best is always through an introduction of somebody who knows us already, but you can also just send us a direct email.
Sounds great. Is that different with you, Michael?
Not much. Go through the network, and there is also on our website, you can find a section about how to approach us. But basically, the recommendation is still the same. Go through the network.
Sounds great. With that, I would like to end today's session. I would like to thank you, Michael and Philip, for sharing all the insights you did in the last 45 minutes. I would like to thank all the guests and participants we had in our webinar today. And again, apologies for the initial technical glitches as they happen in today's world. Again, thank you so much. Have a great rest of the week and see you soon again. Thanks and goodbye.
Thank you.
Ciao miteinander.
Tschüss. Bye.
Ciao, ciao.
Ciao.